Hey guys, Mike here. So, oh boy, CPI data came out, and boy, was it hotter than expected. And this isn't good for anybody. The stock market, consumer, you name it. And you can see, obviously, 8.3% is not what we were expecting. And core, plus 0.57%. That's a 7% annual rate, which is not good. Headline CPI plus 0.33%. That's a 4.1% annual rate. And so, this isn't good. It's double to triple what the Fed actually wants it to be. And so, what does that mean? Well, that's what we're going to get into. It means obviously the Fed is going to have to remain hawkish and continue raising rates, continue running off their balance sheet. And this is for many reasons. But the other thing is, the more important thing to look at, is what does this mean for the consumer? Because the consumer drives our economy, right? The consumer drives these earnings for all of these companies we're invested in and stuff, right? And so having inflation, even if it finally levels out, which it should eventually, but if it stays, between 4 and 6% for long periods of time, that is going to eat away at what supposedly we've been told by the banks is this nice cushion we have as consumers. Supposedly we have, according to the banks, around $2 trillion, right? Sitting there in the banks, and I'm kind of curious what that's divided over, what income levels that $2 trillion is, because of that, is that just everybody in the country, or is this people making below a certain amount of money? Because that's going to get ate up very quickly. And so if you're getting out of this, please hit that like and subscribe button. I really appreciate it. Share the video. And so here is the data we're talking about. As you can see, this is the 1 month percentage change by month here, and it goes up and down. So obviously nowhere near as high as March, but still up 0.3. And then getting into the numbers, guys, and this is where, I'm not surprised at all about this, but, look at food. And this is what hits everybody in the pocketbook. I mean, my wife and I keep a budget on this. It goes up every single week, it seems like. I mean, you see these numbers, they're staggering, right? And the crazy part is, I read about certain products were going to go up, or certain food items, and that's exactly what happened. I mean, look at these numbers. That's just staggering to think that food is still going up at this point in time. And it doesn't seem to be slowing down at all. And so this is the big one that's going to hit us in the pocketbook, probably more than any of the rest of them. Why? Because everybody's got to have food. You got to have eggs. You got to have milk, bread, all this stuff, fruits, vegetables. And so that is just not good at all from here on out. And this is a warning that came out last month, warning us that food prices are going to continue to go up 3 to 4% for the rest of the year. And these certain items they laid out are absolutely what went up on this report. The oils, the poultry, the fresh fruit, which, we buy for our son every week. And I mean, it's just a mess. Dairy, and then eggs were the shocker. Eggs went up astronomically in this report right here. And then the one I'm really not looking forward to, another one's going to hit our pocketbooks, energy, right? Electricity. And I live in Florida, and I am not looking forward to how much we're going to have to pay in these power bills come summertime. All right. And then the other one, my God, gasoline hits an all-time new high across the country. And then diesel fuel is just going through the roof, which of course is going to affect transportation costs, which we're going to end up paying for. And then going on to some of the things, you don't necessarily have to buy like apparel, new vehicles, used vehicles. I mean, CEOs came out and they said car prices are not going to really come down because the input costs are more now. So, I know a lot of people, including myself, want our cars to last at least another year or two to try to get through this before buying another car, because they're going to stay high because of the chip shortage and everything else is going on. And so, but this is something you can kind of choose to buy or not buy. But then you go down to medical care services, that's something you got to have, right? And so that is also increasing. And for those of you flying and who thought you were going to go on a cheaper trip, you forget about that, because airline fares through the roof, and they're going to continue to be through the roof. And here is why.
Your assessment of the market right now and the demand that is out there.
Well, the demand is phenomenal. We've never seen in our company's history demand for our product and services at the level we are. In the month of March, we had the highest sales in terms of bookings of any month in our history, period.
Highest ever.
Highest ever in March.
Not just going back to the start of pandemic.
Highest ever, and this is continuing into April. The consumers are ready to go. Our people are out there doing their very best to serve the surging demand, but people are ready to go when they're traveling, and there's great preference for Delta.
As you ramp up your schedule, how much of a headwind, if you will, is the ability to add staff so that you can add as many flights, as many crew?
first part of the summer into the second quarter, we're about 90%. We've been getting out ahead of the staffing issue onto Delta at all levels, pilots, flight attendants for summer. We're going to bring the rest of the capacity back, open the new seats. There'll be a gradual return. Maybe by the end of the year, if we really pushed it, we could get back on staffing.
You have raised your fares, as have all of your competitors, dramatically. As demand has returned, you've got to offset what you're seeing with jet fuel. Have you been a little bit surprised at how much you've been able to raise them? Not that you're trying to get more from the consumer, but you've raised them dramatically, yet the demand is still there. You haven't seen the pushback of people saying, whoa, too far.
Well, they've been raised dramatically as compared to last year, or maybe even the year before. But those were periods when the pandemic was really depressing airfares and we didn't have traffic. So it's really not fair to compare it to the last 2 years. You really have to go back to 2019. And yes, fares are up relative to 2019, but not necessarily as dramatic as the just 1 year indications suggest.
We are coming up on the Monday deadline for the mask mandates.
And that was just from last month. And I don't use the word giddy to describe grown men very often, but was that dude not giddy? I mean, he was about to bounce up out of his chair, right? I mean, he is so excited. And all of the executives from these airline companies, when they reported earnings, they were bragging literally about how much they've been able to raise rates on us, and we just keep paying it, right? Because we want to get out and go travel and do our thing. And so they will continue to do that. And I mean, that's, not helping, but they're not going to bring it down because demand is there and we're willing to pay. And here comes summer, busiest traveling part of the year, right? And so that's going to continue to go up. And the fuel costs, like I said, it's unbelievable. I mean, my wife's family, they're farmers, and so they need a lot of fuel to run all their equipment and everything else. And it's just, the numbers they're giving me is staggering. And that's why I wasn't shocked by the food prices at all, because they're farmers and they're telling me, yes, I mean, this is going to continue to happen, especially throughout 2022. Even if it levels off, the prices aren't going to come down. They're just going to stay high. And what's that going to do? And why should you be concerned about that? For two reasons. One, if you're an investor, what is it going to affect? It's going to affect all of these companies we invest in, because why? People are going to start to run out of money, right? That's just what's going to happen. Wages aren't even keeping up with this at all, not even close. I mean, the Fed president has said that multiple times. And so even if it just levels out, but it stays, like I said, between 4 and say 6, 7%, somewhere in that range, that $2 trillion supposedly that we have sitting in those bank accounts, it's going to start eating away very quickly at that. Okay, what else is going to happen? Student loan payments are going to start coming back on. That's more money coming out. What's the Fed doing? Interest rates going up now. I mean, have you seen what a mortgage cost right now as far as a 30-year mortgage, even to refi or to refi student loans or to go out and get a car? That stuff is going to eat away very quickly at that. And people are going to start to say, you know what? I don't need to go travel here. I don't need to buy this thing off Amazon. I don't need to go buy that car. I don't need to go buy this. And then what happens, right? Earnings start to come down. Okay, demand destruction. That's just what happens. It's already happening. All right, you've probably, if you've made that decision yourself to say, you know what, I'm not going to buy that pair of Nike shoes. I can go buy this off-brand name for a third of the cost, and it works just fine, right? I mean, I made those. My family and I have made those decisions. I'm sure you've made those decisions, and that will affect earnings. You already see it. You already hear e-commerce. Even like Wendy's reported, they missed expectations, right? Pet products are down by a country mile right now. People just aren't spending on things they were spending on last year, okay? And so that's why you see the market tanking right now, trying to figure out, well, where are we at here? What are the earnings going to be? Everybody's downgrading their forecast, okay, for 2022. And so that's where we're at. And, it is what it is. There's nothing you can do about it. That's why I say, for me, it's not about freaking out about it or stressing about it or losing sleep. It's out of my control. Right, I can control our budget. That's all I can control, right? And so do what you will with the information, but it's something you need to know, especially as an investor or as a consumer as well. And so, because there are places out there you can find nice deals as far as buying stuff, as well as, a lot of stocks are on sale now, and they will continue to be on sale, okay? For here on out, you're going to get your bear market rallies, that's for sure. You can almost bet money on it. We're due for one. We're actually overdue for one at this point in time. So, we'll see what happens. We'll see how the market consumes this information, how they want to deal with it and everything. As I told the members, this is one of those times where I don't know any news coming out now after this that could really should, be a catalyst for the market to go higher. It's just when the institutions want to cover their shorts, take all that profit from beating down, because they bought puts all the way down and shorted these stocks all the way down, then they'll pop us up like it did on March 14th through the rest of March when it ran up that, rip your face off rally. Now you're going to see stuff like that, 5, 10, 15% moves like that. And, will there be news behind it? Maybe, probably not though. It's just when the institutions want to move it up, they're going to move it up. When they want to short it again and ride it right back down, they're going to ride it right back down. Okay. So just buckle up, be prepared, educate yourself on this kind of stuff. And that's where we're at. And so I'll see you guys later. Have a good rest of your day. Don't forget to hit the like, subscribe button. I really appreciate that, guys. Have a good one.